Good afternoon, everybody. If you're coming in, you are in the right place. What's happening in the stock market for the week of March 28th, 2022? This is the first time that we're doing it this way, so I'm just going to give it 1 minute. But in the future, since this is going to be a weekly occurrence, we're going to start right at 4 o'clock so we don't hold everybody up. In the meantime, market going out at its highs. So it had some weakness early on, hit a low around lunchtime, and then boom, just rallied up, took out the highs and everything. We'll talk about that and more in just a second. Like I said, we are going to get started. Of course, I have to share my screen, which is always a treat on my end. See if I could get this done correctly. Probably not. Okay. Give me 1 second and we will share the screen and get going. Okay, here we go. All right, gonna get started. Welcome to what's happening in the stock market. This is for the week of March 28th, 2022. Breaking news that must be mentioned right away is Will Smith smacked Chris Rock last night. Apparently, this is the most important news in the world because there is so much talk about this, but whatever. I mean, I guess it took a usually boring event. Ratings have been falling for years for the Oscars and made it a little bit exciting. People are asking, is it staged? Is it real? I don't care, but it's all over everywhere. So I thought I'd mention it and stay current and hip. All right, so welcome to today's webinar. Like I said earlier, this is going to be a weekly occurrence, Mondays, 4 p.m. Eastern. My name is Michael Saul. Don't have a good picture to show you, but eventually I'll get around to getting out of my shell and I'll actually show a picture of myself. I am born and bred in New York City in a borough known as Staten Island. I've lived in Jersey for the past 20-something years. That's New Jersey. I live in the center of the state. I've been investing and trading in the financial markets since 1993. Started with commodities, moved to stocks during the first internet bubble in 99, and there was no looking back. I've won some, I've lost some, and I've learned a whole lot of lessons along the way. Love to tell you I'm perfect. I am far from it. How I look at the market is I use a blended methodology, mostly based on price charts. I use price charts as a roadmap. I don't think they're the be-all, end-all. Okay, got to take into account news, got to take into account fundamentals, got to take into account a lot of things. But I like to use charts to get a feel for what's going on. I'm not going to get into an argument, do charts work? If charts don't work, it means you have a bad charting program. All charts do are what they're told. They take price and volume and put it in a graphical representation. I'm a visual guy. I like to see what the charts look like, what we've done in the past, what we could potentially be running into trouble with resistance or help with support on the downside. Okay? All right, great. So this is a work in progress. It's going to evolve over time, and your feedback is welcome, even polite criticism. I have thick skin, unfortunately too thick. I'm way overweight for how old I am, by the way. By the way, I'm 53 years old, in case anybody cares. So it's fine. You can give me polite criticism. I appreciate it. I always want to try to get better. Most importantly, I always want to make sure you're gaining a lot of value out of showing up here. You're taking time out of your busy day to come here and listen to me drone on about the market. Hopefully I'm not droning on, but talking about the market. So you know what? I want to make sure you're gaining value. I'm happy to answer any questions you have. You can leave them in the chat box, but no political opinions. Although that doesn't mean politics are going to be completely avoided. Unfortunately, politics have to be talked about. There's just not going to be opinions. I'm not going to talk about Joe Biden's the biggest threat to the United States, or Joe Biden's the greatest thing to ever happen to the. That's not what this is about. All right. So I'm not going to be giving opinions, and of course I'm picking on the president, but it could be anybody, right? I'm not going to be talking about anybody in any political party and giving my opinions on them. Quite frankly, it's none of your business what my political opinions are, and it's none of my business what your political opinions are. Also, I'm not going to be giving financial advice here. All I'm going to be doing is doing some analysis, talking about the news, talking about what we can look forward to. So there's not going to be advice here. Don't take anything I say as advice. Do your own due diligence. That's why you're on Seeking Alpha. That's why Seeking Alpha is really the greatest platform, because there's so much information there that you can look up what you're interested in, and you can do your own due diligence and come up with an opinion on your own. Now, I will give advice on who makes the best frozen vegan pizza. Now, just to let you know, I want to make sure you understand this is the best frozen vegan pizza, not the best pizza of all time. None of that. It's Annie's original. Unbelievable. Fantastic. Okay. Now, of course, for regular pizza, there's no argument. It's the New Haven stuff, either Sally's or what is it, Frank Pepe's, before they got bought out by the private equity. Now they're not as good. Okay, great. Let's get started. The top stories in the market continue to be the same as they were last week, which is, of course, front and center, the Russian invasion of Ukraine. The second story is inflation, and the last story is the bottom really in? So let's talk about the Russian invasion of Ukraine. And I know you've seen a lot of this all over the place. So maybe Will Smith smacking Chris Rock is actually a distraction from this, unfortunately, because the progress seems to be 2 steps forward, 2 steps back. Every time there's talk about a ceasefire, it seems to break down, and there seems to be, okay, we can't come to an agreement, etc. There's still lots of damage being done. A lot of people have to flee their homes, a lot of damage to the cities. It's just, horrible when you're looking at the video and the pictures and hearing the news. It's just, absolutely horrible what's going on there. Negotiating teams plan to meet in Turkey on Tuesday. Maybe they will gain some progress there. And there were strong words from President Biden this weekend in Poland. He was talking about how, Putin has to be taken out of power and other things. You can read all about that. Again, not here really to talk more about that, and we could spend 2 hours talking about that if we decided to make that the main topic here. But you can read all about it. There was something else today I read in the Wall Street Journal, actually, that there was a new spending bill, and that President Biden has doubled the increase in defense spending, and he plans to give some of that money to Ukraine to help fight off the invasion by Russia. Now, the big question is, does the market even care anymore? And again, just to let you know, I used to do this internally just for the people at Seeking Alpha. Now I'm doing this for the public. So I'm going to give the same disclaimer I gave last week. I don't feel like being canceled or told that I'm heartless or how can you say that, right? I'm not asking if people care anymore, okay? From a humanitarian standpoint, I like to believe that people at their core are good people, and they do care about what's going on over there and the suffering people are going through, having to leave their homes, having to, get out of the way of cluster bombs and everything else. That's not what I'm talking about here. I'm talking about the market. Okay, so when Russia first went into Ukraine, there was a big flush down. It was a short-term bottom. We started to bounce. We bounced up a little bit. Then we came down on the NASDAQ and tested it on the S&P. We put in a higher low. And since then, 2 weeks now, we have been on the bounce. So what happens in the U.S. market, and this is just, I'm not saying it's right or it's the way it should be. I'm just saying this is how it happens. People care for the most part. The market cares about what's happening here domestically? What's going to affect us domestically? And sure, there are repercussions about what's going on over in Ukraine, right? There's the threat of cyber attacks from Russia. There's the threat of runaway inflation as fertilizer and wheat exports are banned, okay? But the market climbs a wall of worry. And right now we have some things to be worried about, and the market is moving higher. So eventually the market tends to become apathetic about what's going on. So just something to keep in mind here. I'm not saying that I don't care anymore. I'm not saying that people don't care anymore, but business does go on, okay? And that's the question that we have to ask here. Inflation last week, after, well, let's go back to 2 weeks ago, right? Let's go back from a week from this past Thursday, or was it Wednesday? What was it, the 2-day meeting? Whatever it was, I'm already losing track of it. But there was a 25 basis point rate hike, and the market loved it because the Fed Chairman Powell came out and said, this is what we're going to do. We're going to raise rates, and it's okay because the economy's running hot, and that's fine. We'll be able to raise rates, and the economy will be able to deal with it. Inflation is there, but it's not so bad. Then last Monday, he comes out and says, whoa, 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 we may have to get more aggressive. And now we may have to raise more than what we did just a few days ago. We may have to raise 50 basis points, which are now, the market is now pricing them in for the May and June meetings. The question is it too little, too late? Okay, is Fed Chairman Powell going to be able to navigate a soft landing, which means no recession, or are we going to go into a recession if rates are raised aggressively? And the recession risk is real here. Now, it doesn't matter, right? Is the market still going to function? There's still going to be opportunity to make money in a recession. But the question is, how will it affect us in our spending power? How will it affect us in growth? How will it affect us in our jobs, right? Will, is it going to mean that companies are going to have to cut back if we hit a recession? People are going to stop spending as much money, right? Money is the oil that lubricates the economy. So people, and actually, let me rephrase that, the spending of money is the oil that lubricates the economy. People have to spend money to keep the economy going. So Goldman Sachs came out, they said if oil reaches $200 a barrel, which is now about $100, it could lead to a recession if we are not already in one at the time. Again, all right, great. I mean, not making fun of Goldman, they're very smart. I'm trying not to mock them here, but I mean, all right, I get it. I mean, my 12-year-old could have told us that, right? If oil doubles from here, it could lead to a recession if we're not already in one. All right, high oil prices were the catalyst for the 1974 and 1979 recessions. And they also said that there are upside risks to inflation forecasts, downside risks to growth forecasts due to the Russia-Ukraine conflict. Okay, so the tail is wagging the dog here. We'll hear more about that in a little bit. What about stagflation? Well, stagflation is also being thrown around by the cool kids, but as of now, the risk here in the United States for its appearance is minimal. So what is stagflation? Stagflation is slowing economic growth, which is very possible, plus inflation, which we have, plus high unemployment, which we're not even close as of now. You see the reports. There are tons of companies continuing to not be able to fill positions. So unemployment, which is very key, it's a key factor, is not showing up here. Now, Europe, it may be a different story because Europe relies heavily on Russian energy imports. And if that gets shut down, if they decide to say, you know what, hey, we're going to ramp up the sanctions here, well, that could be a problem. We could have stagflation in Europe. Does it move over to the US? Wait and see. In my opinion, and again, I am not a world economist by any means, but from what I've read from some people much smarter than me, stagflation here in the United States is a small risk. Now, in the meantime, mortgage rates are flying. The 30 years now, I just read 5.3 in some depending on where your credit is or whatever. But it's I believe it's over 5% now. Sometimes I have a hard time deciphering what they're trying to say here. But what this is doing is it's making it more difficult to afford a house. I mean, for once, my timing was impeccable. I locked in my mortgage in November. I cried. I was crying for an extra eighth of a point. I locked in at 3.375. I know people locked in under 3, right, which is great, okay? I was crying because I got 3.375. Well, you know what? If I would have locked in today, if I would have bought today and locked in over 5, it's a difference of, I don't know, $800, $900 a month. That's real money, okay? Already houses are going crazy because of inflation, are going crazy to the migration to the suburbs, out of the city, whatever the reasons are. Now what happens when it's even harder to afford a house? Well, long-term outcome is usually the same, and that's housing prices come down significantly. People go upside down in their second and third mortgages, and there's problems. So let's hope that doesn't happen, because I don't wish that on anybody, but it's definitely something to pay attention to here. Now, what else can add to the inflation risk? Well, Russia is banning fertilizer and wheat exports. It could send prices, which are already sky high, even higher. They're saying it's 200 to 300 times more expensive to buy fertilizer. And more importantly, once again, on a humanitarian level, it increases famine risk across many countries, and particularly in the continent of Africa. So that's something to pay attention to. You're going to hear a lot about this. Food is already going crazy. I can't believe how expensive it is now to shop in the supermarket, but prices are expected to go even higher. So let's talk about last week. Last week, the bulls got the job done. The S&P up 1.82%, the Dow up 0.5%, the NASDAQ up 2.23%. So the second week in a row, the market overall, NASDAQ led, but the market overall closed higher. Okay, so it's grinding. What were the top groups last week? Well, energy, which is up nearly 33% year to date. This is as of Friday, by the way. Basic materials, they were up 4.23% plus 8.5% year to date. And utilities were up 2.89% plus 1.64% year to date. Now, these three groups are the top 3 groups for the year as well. So not only last week, but they're also the top 3 groups for the year. Now, the bottom groups, healthcare lost about 0.6%. It's down 6% for the year. Real estate down 0.3%. It's down 8.7% for the year. And industrials were plus about 0.5%, down 3.52%. Now, these were the 3 bottom groups last week, but these aren't the 3 bottom groups for the year. The 3 bottom groups for the year are consumer cyclicals down 11.5%, technology down 11.3%, and communication services down 9.25%. Okay, now this makes sense on a few levels, right? Why is technology down? Well, technology got way out in front of it themselves with valuations and with a lot of buying into the hyper growth, et cetera. Consumer cyclicals, why are they down? Well, consumer cyclicals, also known as consumer discretionary, okay, they do good when the economy looks like it's going to go crazy. And even though the Fed is saying the economy is nice and strong, a lot of people don't believe that. So what do? They get out of the consumer discretionary stuff. So the word for last week was grinding. Here is a 5-day chart. This is an intraday chart. And it's actually a 6-day. I also included today as of 3 p.m. What sucks about doing this at 4 o'clock, and you know what's it's going to be, is that I can only get charts up to right before I start and since I usually like to put a lot of charts on, I can't just do fresh charts at 3:59. So anyway, as of 3 p.m., this is how we look. Like I said, we went out at our highs, so we're even higher than this. So Monday we were down, Tuesday up, Wednesday down. So we're zigzagging early on. Thursday we closed up, Friday we closed up. Today we sold off early, like I said, but then we ramped up and we actually closed even higher than what we're seeing here. This is the AAII weekly sentiment. This comes out every Wednesday. This is the American Association of Individual Investors. What it is It's a poll sent out to members who belong to AAI, and they ask, where do you see the market in 6 months? Now, why is this useful? Well, it's always good to see what the consensus feels, whether you're a contrarian, right? You want to go against what they're saying, or maybe you want to go with them. You want to see what everybody else is doing. So you could see as of last week, and this comes out on Wednesday, you can see the bulls uptick to 32.8%. The week before, they were 22.5%. So it's the largest reading in about a month, and the bears had the lowest reading in about a month. So that's good. You could see the historical average is 38%, so it's still under the historical average. So what does this tell us? This tells us that people are being are returning to optimism here in the market, but not full bore, hey, here we go, we're off to the races. Here's the CNN Fear Greed Index. Last week, we were fearful with a 39. A month ago, we were fearful. But last week, we ticked into neutral. So based on this, it's based on 7 different criteria. You can look it up if you want to. But it appears that we're now neutral. So look, the way sentiment usually works is, and if you want to use sentiment to help you make decisions, it's like driving a manual car, right? You don't go from reverse to drive. You go from reverse to neutral to drive, or from drive to neutral to reverse. It's the same thing with sentiment. If sentiment goes, hey, everybody's fearful, oh, now everybody's greedy, yeah, that's hard. That's really tough to get a beat on that, to get a read, right? But when it goes from extreme fear, which it was a few weeks ago, to fearful, now to neutral, that's good. Let's see if now it goes the other way and people start to get greedy here. This is the VIX, this is the CBOE volatility index, and it's continuing to fall. It's even lower than when I grabbed this. So it was up here at 52-week highs just a few weeks ago, but now it's headed back towards the lows of the year. So what does this mean? This means that, okay, the volatility is coming off the table here, and you could see that in the market as rather than these big moves, we're grinding here for the most part. High valuation, also known as hypergrowth stocks. Okay, I use Cathie Wood's ARKK as the benchmark for this group. You can use whatever you want. So ARKK is on the bounce, but it's still showing poor relative strength overall. Don't read into anything of these big circles. I just didn't feel like taking an hour to make sure each circle was exactly. So it's not like, oh, the bigger circles mean something. No, no, no. All I'm showing is that ARKK is in a downtrend. Okay, it is in a downtrend. Basically for over a year, but this is just looking starting in November, right? It's moving lower, it's making lower lows and lower highs. It's in a downtrend. Right now, though, it is at what's known as an equilibrium point. So it is coiling up and it is waiting for its next move. So what the market does, and what the market has done historically since it's been charted since whatever, the 1800s, by Charles Dow, right, is the market rotates between periods of volatility contraction and volatility expansion. So when range, okay, which is a surrogate for volatility, when range starts to contract, what we look for here is a move one way or the other out of it. I do not predict, okay, but I prepare. And ARKK says a move is coming one way or the other. Right now, it's lagging the S&P and the NASDAQ overall. So COVID had the biggest lockdown in China in over 2 years, right? Shanghai. They're shutting down Shanghai in 2 phases. They started today, and I believe Friday is the 2nd phase. Now, the CCCP has a zero tolerance policy when it comes to COVID, so they immediately go to lockdown. Is that going to happen here in the US if COVID starts to flare up again? My personal opinion is no way. I think people are done with the lockdowns. Thankfully, Omicron seems to be less severe than other strains of COVID, so that's good. And they're saying this new one, what it is, BA.2, whatever, is supposed to be not as bad, which is good. I know people who are having long-term effects from COVID. It really sucks. Yes, a lot of people that a lot of us know either got it and came out of it okay. I know some people died from it. We also know that, right? I just don't think lockdowns are coming in the US here. And again, I think people, while they may be scared of higher gas prices and higher food prices and what's going to happen to the market if the Fed starts raising rates, I think their fear of COVID is gone. That's just an opinion, okay? Oil. So oil stock, this is crude oil, sorry, not oil stocks. This is crude oil. Now, crude oil had a down day today. It was down, I think it was down over this. Again, once again, I snagged this. I snagged this later than 3 o'clock. I tried to get it as low as possible, but you can see oil is sold off. It's still above $100. Let me take a quick look at my live chart here, and let me get an update, because this is kind of, I'm talking about it. I want to make sure I'm talking. Come on, my charts. Anyway, so oil did sell off on the day. It is in a triangle here, or probably more like a coil. Again, volatility is coming down to an equilibrium point. So it should move one way or the other out of this. It closed down 9.2%, so a little worse than what we're seeing here. All right. Now, what does this mean? Well, oil lurched over $100. It went up to the 130s, almost hit 140, okay, and then it sold off just as quickly. Then it got a bounce, it put in a lower high, and now we're waiting on its next move, okay? If there is a ceasefire with Russia and Ukraine, likely that will send oil prices lower. But I'm really not the expert when it comes to the energy complex. The person that is here at Seeking Alpha is an analyst named Michael Boyd. And Michael is holding a special free webinar tomorrow called Energy's Next Big Move. It's at 2 p.m. Eastern. It is free to attend. My colleague here, or my teammate here at Seeking Alpha, his name is, he actually officially changed his name to Seeking Alpha Webinars. He is going to put the link in the chat box where you can go and register for the webinar. Like I said, it's free, okay? There's no strings attached. Michael Boyd, he runs the service Energy Investing Authority. I did a dry run with him, and the information he's sharing is awesome. Not only is he going to talk about oil, he's going to talk about an overlooked subsector in energy that people really should be paying attention to. He's also going to give 2 stocks out. And like I said, it's free, so just register. Now, what other news happened that is happening this week? Apple wins the Best Picture Award for Coda. I didn't see it. Heard it was good, but I didn't see it. But on the market side of things, they're also cutting production on iPhones and AirPods due to the Russian invasion of Ukraine. That's what they're blaming. The stock was down early, but it recovered. So it looked like it was going to be down, but it wound up recovering. Tesla, they had news. They are going to put a vote for another stock split in the fall, I believe I read, and also considering a dividend. So Tesla was up nice. You can't keep a good stock down, I guess, down at 700, and now it's already up over 50% from there just a few weeks ago. So yeah, Tesla once again getting the favor of the bulls here. Buffett has some competition. So last week, Berkshire Hathaway, they announced their latest acquisition target was Allegheny Corp. Symbol is Y. And apparently that acquisition is picking up some interest from other suitors. Other insurance companies may become, may be interested in picking up this company. Why? Well, according to analyst Meyer Shields, at only 1.26 price to book ratio, the deal is actually at the low end of past insurance deals, despite Berkshire making a pretty nice offer, right, with a nice premium. So you could see it was trading down in the high 600s. Then Berkshire came out, said, hey, we want to buy it, went up to the 840s. But then look what happened on Friday. It popped over 860. And then, of course, today it pulled back a little bit, down nearly 1.5%, maybe even down 1.5% here. So things are calming down a little bit. But the question is Buffett going to fight for this? And the answer is probably not. Buffett usually doesn't get into bidding wars. He has a price that he wants to pay. If he doesn't get that price, he moves on. He's price sensitive. So meme stocks or meme stocks, I call them meme stocks, but they're really just meme. I don't know how that word is pronounced, meme, but whatever. Anyway, so GameStop and AMC Entertainment caught some fresh bids last week, but they're up big today. So my question is this a sign of things to come or it's just a blip? So here's one of the biggest gainers of the day. This is GameStop up, I don't know, I think it was up over 19% when all was said and done. Really big move off the March lows, right? So are people holding on for dear life here? And what is this signaling? Is this saying, hey, money, speculative money is coming back into the market and these kind of plays are going to become the norm for a little bit again? It's definitely worth watching here. I want to see what happens over the next few days and specifically the next few weeks to see what happens after this big move, how this big move is digested. So the big question now for me is it time to wave goodbye to the bear? Technically, if you want to use the 20% rule, which is 20% off the highs, the only index that was really in a bear market was the NASDAQ. Okay, the S&P never got down to 20%. So my opinion, and again, not advice, just opinion, we're on the bounce, but we're overbought. Overbought means we've gone up too far, too fast, and it's on a short-term time frame. Okay, so does this mean we crash from here? No, it doesn't mean we crash from here. But we want to watch the next pullback. I want to see what happens on the next pullback. And yeah, there will probably be another pullback. I'm not saying it's going to go back to the lows. It could just be a mild pullback. If it's orderly and it's contained, that's good, because that means we could set up for a try for the highs on the year at a minimum for the S&P 500. So that's something I want to watch here. I think we're a little bit extended here. But again, it doesn't mean it's time to short. It doesn't mean it's time to sell. That's not what it means, right? The market can go much higher than you expect it to. Confidence runs much higher than, so when people are confident in the market and they're buying, it can go a lot farther than you anticipate, right? So here's the S&P 500 daily. Again, we closed higher than this, but we have some resistance showing up at 458 area. That was a level where we turned down from in February. So this is how I use charts as a roadmap. This is what I want to watch going forward. Here's the NASDAQ. The NASDAQ, which is the QQQ I'm using, right? You can use a bunch of symbols, but I use the QQQ, NASDAQ 100, when I'm doing my analysis. 370 is resistance, but look at how volume has been declining on this push up. That's something that you have to pay attention to as well, because volume is the horsepower of the move, right? Richard Arms, who wrote the book, The Arms Index, he was a writer for Barron's back in the 60s, and that's his saying. So we have to watch to see not only price, but also the volume that backs it up. So some people are still here just sitting, waiting for a crash. I'm not sitting here waiting for a crash, okay? It's in my opinion, it's a silly way to try to time the market, is saying, oh, we're going to crash any minute. No, okay? And the truth is, if a crash does happen, it usually comes out of left field that people aren't really expecting it. It's tough to kind of expect a crash. Here's gold. So gold ramped up after the Russian invasion of Ukraine as a flight to safety, but it's now given back most of what it gained on that news. However, it's still above its base breakout, and it's now in a consolidation. Let's see what the next move is from here. Here is the euro. The euro has been in a downtrend for a while, and of course, we talked about possible stagflation in Europe, but depending on what the sanctions are going to be with Russian energy, that could really hurt the European economy. So there is selling going on in the euro. Here's the 10 years. We talked about mortgage rates. 10 years went down to 2019 levels before reversing today. It is in a short-term downtrend, but it is oversold. Just like the S&P may be overbought, bonds, or these are notes, actually 10-year notes, they are oversold. So I'm watching here for a bounce. And again, I want to see what that bounce looks like. Do we actually get some teeth in it, and does it actually move, or does it roll back over? So last week in the crypto market, crypto was on the move. Bitcoin and Ethereum broke out of their respective consolidations to the upside. Now we have a long way to go to revisit the previous highs, but every rally has to start somewhere. Okay, we have to start a rally somewhere. So why not here? I don't know. Again, I'm not predicting. I'm just watching what's going on. Now, if you want more granular analysis on the crypto market, go to Seeking Alpha Marketplace, check out a service called Crypto Waves, take a 2-week free trial there. Okay, they're great. And they use technical analysis. They use Elliott wave theory. It's very intricate, very granular, but it's also a real good way to get a read and get a visual representation of what's going on in these markets, not just Bitcoin and Ethereum, also some altcoins and some stocks are related to crypto. So go check them out. They're called Crypto Waves. You can look them up on the Seeking Alpha Marketplace. Here's a chart of Bitcoin. Here's that consolidation. We broke out. 52,100 is resistance. That was a high from back in December. Let's see if the momentum can carry us up there. If this is fake or a false breakout, it's not fake, it's real, it's actually happening. But if it's a false breakout and it winds up turning back down, you have 37,162 and then 34,322 as possible support points. So what are we focusing on this week in the market? Will there be any progress towards peace in the Russia-Ukraine conflict? I really hope so. Hope there is. The question now from a market perspective is, will sanctions be pressed? Is Europe going to get on board and starting to sanction the energy exports? We're in a tough situation because Europe, I believe, gets 60% of their oil from Russia or something. I don't know the exact number, but we can look it up. I'll look it up. The question is, if there is a settlement, a ceasefire, and hopefully more than a ceasefire, hopefully it's over, will the sanctions be lifted or at least diminished? And what about the export bans? Russia is banning their export of wheat. They said, hey, we're not exporting fertilizer or the stuff that makes fertilizer, whether it's gas and everything else. So what are they going to do? Are they going to give that up in order to get sanctions relieved? Something to pay attention to here. Now, the aggressive inflation talk that we had last week, that we're going to get aggressive with inflation. It's worse than what we thought. Guess what? A year ago, when we were saying it's transitory, it's really not. Okay, so it's really here and it's really a problem. Although we all knew that when we went to the pump to fill up our tanks or we went to the supermarket to buy our food. Anyway, guess that's not how it is in Washington, D.C. All right, anyway, and of course I'm being really sarcastic there. So will the aggressive inflation talk rear its head again? And how's it going to be handled? Last week, it was brushed off. The market, had some weakness inter-week or intra-week, but it wound up finishing well. So again, climbing that wall of worry, inflation, COVID firing up over in China again, the Russian-Ukrainian conflict, not really getting any progress. Market continues to climb that wall of worry. So technically, as momentum starts to wane, right, we saw the volume drying up and we saw the grind last week. So if we don't have the momentum to continue, is that going to lead to a decline, right? Momentum precedes price. So in order for price to continue to keep moving, we need some little sparks of momentum. If we don't get that, does that mean we're at risk of a decline? Again, I'm not looking right now for us to go back to the lows. Of course, things can change, but I am looking for us to get a pullback here. And I want to measure and watch that pullback. I want to see what that pullback looks like, because if it's, like I said, nice and orderly, could lead to a test of the highs of the year for the S&P 500. So economic reports due out this week, consumer confidence tomorrow, crude inventories on Wednesday, personal income and spending, and PCE prices. Those are now important numbers for Thursday. And of course, initial and continuing unemployment claims. Friday is the job numbers and ISM manufacturing. Earnings, Tuesday, we have Micron, Lululemon and Chewy, but that's really it for the week. There's other announcements happening, and of course they're important to those companies, but we're really not seeing any big companies reporting earnings this week. So that's it for today. I went 9 minutes over. Technically, I went probably more like 5 minutes over. Started a little late, and also I had to get the housekeeping out of the way early. But I am happy to stay here and answer any questions you might have. Like I said, I can't give personal advice, and you wouldn't want my personal advice, my personal investing advice. But the reason I can't give it, besides it being illegal because I'm not licensed, is the real reason is I don't know what your personal situation is. I don't know how you're living currently. I don't know what your expenses are, how much money you have, and it's none of my business. So I can't give personal financial advice, but I can answer general questions about the market. No problem with that. Anybody have anything they'd like to ask? And I hope you liked today. If it's the first time doing it, I in a little bit too much, in my opinion, but I will curtail that. Let's see. We got some. How flat do you think the markets will be? Okay, so how flat do I think the markets will be when on a longer term or on the short term? Right now, the markets are anything but flat, right? We had a nice loop down, and now we're starting to bounce here. So I don't know if the market is going to necessarily be flat. Do you think the yield curve inversion is worthy of concern, either personally or from a market perspective? Look, you always have to watch for the potential for the yield curve to invert, because it can oftentimes predict a recession. Right now, when we're toying with it, but we have not inverted as of yet. So it's something to definitely keep our eye on, but rest assured, okay, just like the Will Smith smack of Chris Rock, there will be no shortage of reports on the yield curve inverting. So in my opinion, there'll be plenty to talk about if indeed that does happen. Does anybody else have any questions? Okay. Okay. I got a that's it from Daniel Snyder, who is helping me out today. Okay, here's one that came in. What do you think of Amazon heading into the split? So Amazon is set to split. I believe, I could be wrong on this, it's either June or July 6th. I'm sorry, you'll have to look it up. But Amazon's on a nice move here after hitting its low in early March. So will it go back to the highs? I mean, right now it has good momentum to the upside. But if you look at a longer term chart of Amazon, and again, you don't have to be an expert chart reader to see this, you could see mostly since basically the summer of 2020, it's been range bound. It's been in a wide, sloppy range. Yes, it dipped down a little bit this year, but now it's right back into that wide, sloppy range here. So yeah, it has some short-term momentum behind it now. Maybe it could go back to the highs. For me, again, not a prediction, just looking at it. But in the meantime, it's just caught in the range. Do I think the Fed is just bluffing or not real? Okay, I'm sorry. Let me read this. Okay, so what I think you're trying to say here is, do I think that the Fed will wind up not raising any rates? And that right now they're just saying it to try to, okay, it's a good question. Basically, what the person asked is, do I believe that the Fed is just talking about raising rates to try to scare inflation down, right? Which, by the way, I laughed at it, but that's not, that's actually a strategy, right? Talking inflation down. It's not a very good one, but it is a strategy that the Fed has tried in the past. So but no, I believe that they're serious finally about raising rates. I think they should have done it sooner, but they were scared of what it's going to do to the market. I think that here's another question. Why did, the Fed raised rates? Why did the market rally? Well, it was a sell the rumor, buy the news event, right? Everybody was waiting for the market for the Fed to raise rates. They were selling off the market in anticipation of that. But then all of a sudden, boom, hey, guess what? We're raising rates. And it's okay. It's okay that we're raising rates because the economy is nice and strong and it can handle the rate raises. So everybody's like, all right, well, we sold into the rate raise, right? They did what they were expecting to do. And that's what, you got to understand something. The market loves certainty and it hates uncertainty. So when it's not sure, when the message is muddled and not clear on what's going to happen, that's what the market doesn't like. But when the message is clear, this is what we're going to do, and they actually do it, that's perceived as good by the market. No surprises. Market doesn't like surprises. All right, so anything else? I answered the question. Yes, I believe the Fed is serious about raising rates, and I think they're going to raise rates. I think the target is going to change, right? Right now, it's, we're going to do 50 basis points the next 2 meetings, but maybe that'll change in later meetings, et cetera. So there's all predictions, 7 times, 12 times, 11, who knows how many. All right, well, I hope you enjoyed watching this. If you're watching this on the replay, I hope you enjoy the replay. And I hope you could join me again next week. Same bat time or same alpha time, same alpha station next week at 4 p.m. Eastern. Any feedback, you can write to me at michaels@seekingalpha.com. That's michaels@seekingalpha.com. Again, polite criticism is fine too. Hey, why don't you add this in? Why don't you talk about this? Can you talk more about this? Stop droning on about Chris Rock getting slapped by Will Smith. Okay, well, by next week that'll be historic in the historical archives, right? But anyway, if you have anything you want me to talk about, I'll gladly cover it in next week's webinar. Like I said, again, no personal advice, but if there's something that you think I should be focusing more attention on, then that's fine. And don't forget, tomorrow 2 p.m. Energy's Next Big Move webinar with Michael Boyd. It's going to be great. Going to be really informative. And again, he's going to talk about a certain subsector that people are ignoring, and he's also going to be giving out 2 stocks. Thank you so much for joining me today, and I will see everybody next week.